Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago soybeans. I think it's fair to say that this commodity has been frustrating me for a while. Thankfully, that seems to be coming to an end. However, as I've said over many months, it was only when I looked at my longer term monthly charts that I was able to decipher a little of what had been going on and to give credit and warnings where they were due. So if we look at my longer term monthly charts, we can see that the action since as far back as the low seen in August last year till last month built a sideways action. I noticed this action 36 weeks ago, and I'll expand on that part shortly, but I just wished you to see that this sideways action seems to be ending with October's combined monthly key reversal up and bullish engulfing pattern, and this month's follow-on higher, though as is usual, I'd rather wait on such a longer term pattern for where we close this month. But with just over a week to go of November, we seem to have established a basing action around a triple bottom formed over August 2024 to August 25. Even now I feel obliged to caution you on the possibility of a false break higher, but as this seems unlikely, then we have a primary target for this longer term chart up in the 1189 area, with a secondary harder to reach target up at 1244 area. In the way is the bright red neckline, which is currently 1212 and a quarter, and some congestion between about 1141 to 1232 from early to middle 2024. Back to my daily charts, and you can see that bright red neckline hovering over the market just underneath the top of my daily chart. Now, in addition to this bright red neckline, 36 weeks ago I highlighted a bright pink July 24 to October 25 rectangle pattern, which you can still see on my daily chart. It's currently 977.5 to 1104.5. This pattern had been operational until late October, when prices punched up through the upper pink trend line, taking most of the last 2 weeks to stabilize over it. This is the original pattern that was formed by the actions mentioned when I discussed my longer term chart. Now, I said 3 weeks ago, and I quote, "Last Thursday the 23rd, we had a bow tie formation crossover of the short, currently at 1128, short median, currently 1069.5, and the medium moving average is currently at 1028. The moving averages entered disorganized, but I exited in the correct manner. Thus, in theory, between 15 to 20 sessions after crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. Hence, please look out for these between the 13th to the 20th of November. I should point out that the moving averages exited in a bullish manner as well." End of quote. Well, today we exit that window, and looking back we can see not only volatility but a significant bullish action pacing the market higher as a result of the bow tie formation. Finally, and this came after looking at the bullish action on Winnipeg canola last week, such that I drew here a dark blue mid-December 24 to early August 25 bullish Andrews pitchfork. What is noteworthy about this pitchfork is the effect the dark blue middle time, which is currently 1145 and 3/4, had and has on the market since the start of November. It was a cap, a pierced cap late last week and at the start of this week, and today possibly another capping action, or maybe on a closing basis, as this week's action saw a move up to the July 2024 high at 1170 before fully forming a 3-day bearish evening star spiking pattern. I will be very interested to see if the market now resumes its comfortable slide along the underside of the dark blue middle time, though it does not stop prices challenging the middle time. Chicago soybean meal. Okay, so far in 2025, we have had a pair of descending wedge patterns plus a reverse head and shoulder pattern that have broken on the upside, resulting in a significant moves higher, reaching topside targets and becoming something that is now altering the whole strategic basis of this market, which I will discuss shortly. In the immediate past, the market has peaked up over the significant resistance of the dark blue trendline extension to the July to September 2021 descending triangle pattern, which is currently 314.90, and is now stabilizing over this trend line such that it is possibly forming a base. Meanwhile, the top side has resisted, as I stated 2 weeks ago, and I quote, two others that need to be noted. The first is easy enough. It is the high for 2025 at 326.60. Interesting, around there we have some other resistances, notably the 50% Fibonacci line for the May 24 to July 25 move at 326.20, plus some congestion at 326.90. So altogether they make an overhead congestion area between 326.20 to 326.90. Then above this is the 61.8% absolute Fibonacci line at 336.30. And I will leave it at that. And that's the end of the quote. At these levels, we have indeed found resistance, though the peak this week is short of testing that 61.8% absolute Fibonacci line. The next question is simple. Do these resistances form a top or a bullish halfway hesitation? The answer is not obvious yet, though 2 weeks ago we did have a horn top, which failed. And then this week, indeed the start of this week, had a higher 2-day bearish tweezer top pattern, from which we saw the outcome yesterday, and to a certain degree today as well, in a fallback below the interesting 326.20 to 326.90 congestion, containing that 50% Fibonacci line for the May 24 to July 25 move at 326.20. The fall was not as far as the dark blue trend line below, the extension trend line extension below, at least not yet, but it is worth monitoring if it does go down that far. Finally, this commentary would not be complete without me discussing a portion of my commentary which I have repeated now for 128 weeks, so close to 2.5 years, is the annual key reversal seen here in the end of 2023. I said back then, and I quote, "I now only need to remind you once again of my words when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and we've been living in the shadow of this pattern ever since." End of quote. Now I've also added ever since, and I quote, "If there is only one thing you take away from any of my musings, let it have been those words." End of quote. For 2.5 years, the shadow of that pattern has darkened the skyline of this market. Could it possibly be that we are seeing the first signs of the light of dawn stretching through the darkness? Now, I'm sorry if I sound vaguely poetical, but this bearish long-term pattern has been such a cornerstone and companion to this market for so long that it's hard to imagine a time when it may end, but end it must. And one final postscript. If all these moves higher, prices created a monthly key reversal up in October, the first such pattern here since December 2024. Chicago soybean oil. 3 weeks ago, I said, and I quote, "With all the activity in the soybean complex, it was time I finessed this daily chart to show a better and clearer view of what is going on. Thus, the key pattern here is the newly expanded, sorry for the pun, the newly expanded dark blue April to date ascending expanding wedge pattern, currently 51.26 to up off the top of my daily chart," and that's the end of the quote. I also included in my commentary a newer and vaguely paralleling uptrend to the dark blue lower trend line, plus another short-term downtrend and larger descending wedge pattern. All these, with the possible exception of the paralleling uptrend, are now redundant. Going back to the dark blue lower trend line again, we have had, I suppose, unsurprisingly in some ways, we've had false breaks in both directions, with the latest being a pipe top formed this week. However, part of what I said last week is still valid, and I quote, "What I can say is twofold. Firstly, in the immediate market, please pay attention to the overhead mauve medium moving average, currently at 52.17, as this cap price is in October, and also the gold long moving average below, currently at 49.90, which whilst it's not perfect, has helped bolster the second thing to watch for. And as both the 50% Fibonacci line overhead at 53.59 of the July 23 to August 24 move, and the 38.2% Fibonacci below at 48.95 of the significant March 20 to April 22 move. These two features seem to be better at defining the market right now. End of quote. These last few factors still apply today, and I also throw in the old March 2013 high at 51.26 as well as an attractor. Now there are two new features which I would like to discuss. Firstly, we are set up with just over a week to go for November to be a possible monthly key reversal up. Thus, if we close on Friday, 28th of November, either over 49.49 or under 49.07, then we'll be on. Anything in between would have a lesser outside month pattern. Right now, we are looking at a monthly key reversal up pattern. Secondly, we are possibly set up now for the mid-September today action to be a wide double bottom. The neckline for this pattern is at 52.11, and we have had a close over it this week, but just the one. And we swiftly turned lower, so there is no confirmation of this as yet. However, I still feel obliged to lay out not targets, but potentials for such a possible move higher should it occur in between my weekly commentaries. Thus, a primary potential would be up to the 53.59 area, right where the 50% Fibonacci on the July 23 to August 24 move is, and a secondary hardest reach potential is up in the 55.56 area. Now the primary potential is certainly doable, but only if we can overcome the mauve medium moving average and reach that 50% Fibonacci line.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.